Hi guys, welcome back to Only with Ron, and today we are going to talk about the SSD. So you have heard it, you have read about it, and for those flippers out there, you may even curse at it. So let's get it straight. The seller stamp duty has been reverted to 4 years and the tax rate has been increased by 4% across all tiers. So today we are going to skip all the headlines that you already know, all those bullshit that you may have already heard. We are going to break down what this means for you as a buyer or as an investor today if you are entering into the property market. If today you are doing research and planning your next property move, DM me right here and I'll be happy to help you with the data research and planning. So stay with me right here. I'm not going to sugarcoat my words. I'm here to give you the brutal truth and some damn good insights. So hit the like button if you appreciate brutal honesty and subscribe to our channel because it goes a long way and it really helps us and encourage us to do more content like this for you. And most importantly, it doesn't cost you a thing. So like and subscribe now. Thank you. So this is a quick snapshot of the seller stamp duty and the tax rate that you will be incurring if you sell before the 4 years mark. And I think this is a full-blown message to the flippers out there. So in today's context, a flipper means that you buy the property, pay the stamp duty, and you sell it after 3 years of holding. And sometimes it's even before TOP. And technically, as long as you sell before the CSC, it is considered a subsale. If you want to know exactly what constitutes a subsale and what is CSC, this is a link that I am overlaying. You can pause and have a read over here so you know exactly what I'm talking about. So why do buyers buy and sell after 3 years? Is there really a profit in this for them? So generally, Singapore's property market will see higher prices in the new launches after 2 to 3 years. This is mainly due to the higher land cost and construction costs. So those who bought 3 years ago selling a brand new ready to stay property would naturally gain an upside over those new launches that is being launched in the same period. And what is the statistics over the years that we see this kind of subsale transaction? So for context, the regulation was relaxed to 3 years of holding for the SSD in 2017. So let's look back to 2020, the number of subsale that happened, because that was the first batch of people that can actually sell after 3 years of holding instead of 4 years. So from 266 subsale transactions that happened in 2019, we saw a drop to 177 subsale transaction in 2020. So seemingly the relax of the SSD did not actually cause the subsale transactions to spike. Partly I guess it's also because of the COVID period. But I think more importantly, people have not caught on the trend of flipping properties after 3 years to profit. But the number of subsale gradually increased in 2021 and 2022 from 526 to 705 transactions. Then we look at 2023 and 2024. These 2 years have more than 1,200 subsale transactions. More specifically, it is 1,260 subsale transactions in 2023 and 1,314 in 2024. By now, the market has already caught on. There's a group of buyers who buy not to hold, but to flip for profit after 3 years. They may have timed it so that they can sell even before TOP, so they do not need to fork out extra money or pay the higher installments. And there's a time where buyers are riding the wave. So have you ride the wave of sharing this video? If you have not already done it, please share this video with your friends, because what I'm going to drop next is some very useful insights that nobody is talking about. First up, who are the ones that got hit the hardest? Actually, it's just the buyers who enter into a new launch that hope to reap profit after 3 years. So if you're buying a new launch because you want to flip after 3 years, you have to change your strategy. This makes choosing the right development and the right unit even more crucial, because you will have to hold it after TOP. But here is what most people missed out: the real spillover effect. This is what I call the supply gap, because buyers who have already entered this year in Q1 and Q2 2025 would be able to exit in Q1 and Q2 2028. But today, if you are going to enter into the property market, you will have to wait until end of 2029 if you want to exit the property market. And that creates a 1.5 years of supply gap in the resale supply of new homes. So let's less supply, more demand, we will expect the prices to gap up faster, and that is kind of a good news for those who have already purchased. For those of you who have not purchased, stay tuned, I have more insights for you. If you haven't shared this video, let me shamelessly ask you to share, like, and subscribe to this channel. It will mean a lot to us, and it's free. Next, let's look at the rental market. I think for rental, the pressure is on because now most likely you will be holding on to the property after it TOP, and if you cannot sell, naturally people will rent it out. And looking at the kind of sub-sale volume that we are expecting, we will be also expecting that kind of volume to go into the rental market, which means there will be more rental supply of new homes post 2028. If you are a landlord and enjoying good rental income right now, just take note that more competitors will come in and join the game post 2028. And now for those of you who have not purchased and thinking whether you should purchase right now, having the 4 years SSD, well, this is for you. The 4 years SSD is here to stay and it will not be going off anytime soon. But the question is, should you still proceed with this prolonged SSD? One thing to remember is the developers are reading the same headlines as us, and that means they may drop their prices and offer more good deals before the market adjusts and get used to this new SSD change. You see, there's always a knee-jerk reaction whenever a cooling measures is announced. Buyers will wait and observe, but after they realize that the prices are not going to drop to the point that they can accept, they will naturally go into the market, because remember, Singapore property market is still driven by real demand. Majority of the people who are buying is still mainly buying for own stay or to hold as their investment. When that slowly revert back to the norm, there is this pent-up demand that was created by all the waiting and observing, so that pent-up demand will come back and push the prices even higher. So for those buyers who haven't entered the market, think about this. Singapore's property transactions usually stack on top of each other. So after the prices has been pushed up, your next exit will stack up on top of the average pricing and create that new higher average price. And if you follow the asset framework to choose that right property, you'll be able to enter safe and have that strong holding power to your purchase. And if you're still watching this, DM me right here if you want to find a safe entry property while the market is still digesting this information. So here are my final thoughts. This 4 years SSD is not something new unless you were not in the property market before 2017. You definitely need a new play, and you still can reap good gains from the property market. If you want to devise a strategy for your current property portfolio, DM me right here and I'll be happy to chat with you. This is Ron signing off. DM me if you want to preview a launch together or run some numbers together. Like, subscribe, and I'll see you in the next video. Bye!